Good morning, everybody, and welcome to the November edition of our sustainability webinars. Now, in this month's edition, we are looking at setting climate-related targets. So you would know by now, my name is Aletta Boshoff. I'm the National Leader for Sustainability at BDO Australia and also the National Leader of IFRS and Corporate Reporting. And it's really interesting that during the year of 2024, these two roles have become closer and closer because IFRS and corporate reporting is all about those financial reports in the annual report, and sustainability reporting is now also ending up in the annual report. I would like to begin by acknowledging the traditional owners of the land on which we meet today and pay our respects to elders past and present. So in Melbourne, I'm on the land of the Wurundjeri people of the Kulin Nation, and we extend that respect to Aboriginal and Torres Strait Islanders people here today. I would also like to use the opportunity to share with you our 2024 sustainability report, and we are incredibly proud of this report. You'll see that the report, I love pictures and I love color. Now, this report has a few beautiful pictures in it, as you can see there on the front cover, and it's all Australian imagery and even a kangaroo in there. So beautiful images. And the reason we picked all Australian images is you could potentially see BDO sustainability reports from other BDO countries. We're in 166 countries, but we wanted you to see immediately that this is the Australian one and it's got the Australian look and feel. This is the third time that we've published our sustainability report. It's a voluntary sustainability report, so it's not prepared in accordance with IFRS S2 or AASB S2. That will end up in our annual report from 30 June 2026, because BDO Australia is a Group 1 entity for mandatory reporting, sustainability reporting purposes. In this report, as we've done in the previous 2 years, we've used the World Economic Forum, IBC, the 4 pillars, guiding us on what to report and what not. And you'll also see included is our materiality assessment, which we conducted at the beginning of 2022. So it's in response to what our stakeholders wanted, but some very interesting messages, and you can click on the Learn More button to look at the whole report. It's a beautiful report, and a very particular shout out to our COO, Cara Vanabom, and also Melissa Simmons, who works in our clients and markets team, and she's got a specific focus on sustainability. So thank you to those ladies and all the people helping them for a beautiful report. Then, as you know, we had these carbon accounting masterclasses where we presented these in May, and in November, December, we're going through a second round of carbon accounting masterclasses. If you look at the dates, we've dealt with all of those. We've been in Brisbane, Melbourne, Sydney, and we did a virtual session as well on the 19th of November. So the very last one for the year is on Tuesday, the 10th of December. I will flag already now, if you would be interested, or ask if you are interested in these carbon accounting masterclasses, the full day carbon accounting masterclass, looking at boundary setting, scope 1, scope 2, scope 3, 26 case studies, materials supporting this, around 200 pages of our BDO carbon accounting methodology, and also I think close to 300 PowerPoint slides. So there's a lot of materials that you receive as part of it. If you are still interested and you've missed our May series and our November, December series, please reach out to me or put it in the chat box. We are looking at scheduling additional sessions in 2025 because we are getting ready for the mandatory sustainability reporting, and as you know, carbon accounting is a key part of that. Then you also know we are running these monthly IFRS and corporate reporting webinars. We have been doing it for 8 years. Next year, our 9th year. In November, we looked at an update on financial and sustainability reporting, getting ready for 31 December 2024. So even though we're not in the mandatory sustainability reporting regime, what do you have to do in those financial reports? And then next month in December, we'll be looking at the brand new IFRS 18, looking at presentation and disclosure in financial statements. Brand new standards. We've last week published a video document, a guidance document on it, and we'll also be doing the webinar. The sustainability webinars, you can see this has been a journey this year. We've looked at voluntary sustainability reporting. We looked at various frameworks. We looked at roadmaps. And we also looked at carbon accounting, setting targets, and we will also be looking at disclosures in December. So today we're looking at setting climate-related targets, and next month we'll be looking at climate-related disclosures in Australia. The other thing I should say, very shortly you will see that we'll launch our monthly IFRS webinars for 2025 and our sustainability webinars for 25 as well. So look out for those invitations, and it will also be on the website. If we look at today's agenda, we're going to look at the importance of setting climate-related targets. We will look at the disclosure requirements of IFRS S2 and AASB S2. We will contemplate the reasons for setting targets. We'll briefly touch on science-based targets. We look at the risk of greenwashing, because as soon as you start to set targets and publicly publish targets, there's that increased risk of greenwashing, and what can we do to manage that? And then I've also included right at the end some examples of climate-related targets that I could see in the financial statements and the annual reports of some very large organizations in Australia. Now, as you would appreciate, when we look at those examples, nobody has complied with IFRS S2 yet. Nobody in the world. The first time entities will be preparing reports in accordance with IFRS S2 globally will be 31 December this year. So we're eagerly awaiting to see what happens, and we'll share those examples with you. And then AASB S2 is only becoming mandatory for financial years starting on or after 1 January next year. So again, the examples we found were examples of really large entities that are proactively getting ready. And at the moment, it's not necessarily in compliance with IFRS S2 or AASB S2, but they've tried to comply with the TCFD recommendations and doing great work on a voluntary basis. So we'll share that as well. So that's today's agenda. So first of all, the importance of setting climate-related targets. So as you know, in the new annual report, we'll have the annual financial report, we'll have this new annual sustainability report, we'll have a director's report, we'll have an auditor's report. Very important, that annual sustainability report for years beginning on or after 1 January 2025 will have to comply in Australia with AASB S2. And this is a slide that I've previously shared as well, where we try to look at the key high-level groups of disclosures outlined in AASB S2. And we know there's 4 pillars. So governance pillar, a strategy pillar, a risk management pillar, a metrics and target pillar. And you can see there the very last item or the very last heading in AASB S2, the very last section of AASB S2 as part of that metrics and targets pillar is climate-related targets. So that's what we're looking at today, climate-related targets. Looking at this slide, I should also say, last week when we were working on what would be the webinars for 2025, we used this particular slide as guidance because we know that the first entities in Australia will be doing mandatory sustainability reporting in compliance with AASB S2, 31 December next year for the very first time. And I know we've dealt with most of these topics during the past 2-3 years, but now there's a real imminence about it. There's a real importance and focus about it. And therefore, we'll be working through all these aspects next year in great detail to make sure that we provide as much education and assistance to all of our webinars attendees throughout the year. We want you to be ready. We want you to be assurance ready. That's very important. So we're finishing off with climate-related targets, the last item. You can also see the TCFD recommendations, which we've also said is a stepping stone to AASB S2 and IFRS S2, has the similar 4 pillars. And when you look at the pillar on metrics and targets, it already has a high-level recommendation. Describe the targets used by the organization to manage climate-related risks and opportunities and performance against targets. So at the end of the session, when I share with you those examples that I found on Google, you'll see it is entities dealing with this particular recommendation. They describe the targets, they describe their performance against these targets, and I've included links to their annual reports. Most of these disclosures are either sitting in the operating and financial review, where TCFD disclosure should be. Sometimes it's in a separate climate report, sometimes in a separate voluntary sustainability report. So none of those are mandatory, but it's to comply with voluntarily with this aspect of TCFD recommendations. So before we look at target setting, I thought it's important to put it in perspective. What are the disclosure requirements of IFRS S2 and AASB S2? So I just want to, at a high level, step through them so you can see why we're looking at this. It's important from now on forwards that everything you do on your sustainability roadmap, which we've shared many times, that everything we do, you have in mind, am I generating data that would meet the disclosure requirements of AASB S2? Because in the end, that's what you have to report. So you have to run projects and project streams that generate the data that will be subject to assurance and then can be included in your sustainability report. So I want to go back to the disclosure requirements around these targets, and let's understand what we'll have to get ready. So in paragraph 33, it says an entity shall, so it's not optional, shall disclose quantitative and qualitative climate-related targets. So important, quantitative and qualitative. It has set to monitor progress towards achieving its strategic goals. So again, it's trying to bring it together and say, listen, remember we said in the strategy pillar, you have to consider climate-related risks. You have to consider how those risks and opportunities fit into your broader strategy. And now you have to say, okay, what quantitative, qualitative targets have we set to achieve our strategic goals? And then also, you also have to consider any targets that is required to meet law or regulations, including any greenhouse gas emissions targets. So it's not only about greenhouse gas emissions targets. I think at the moment the focus is really on greenhouse gas emission targets. That's what everybody's focusing on. So measuring a carbon footprint and then thinking, what are our greenhouse gas emission targets? But climate-related targets could be anything around any of your climate-related risks and opportunities that you've identified as part of your climate risk assessment. And then for each target, the entity shall disclose a list of things. So number one, the metric used to set the target, the objective of the target. So, is it about mitigation? Is it about adaptation? Is it conformance with science-based initiatives? And then in C, the part of the entity which the target applies. So this is interesting. A lot of groups are doing a GHG emissions calculation for the group, but they also can, measure it per geographic region, per subsidiary, per entity, per business unit. So if you are going to set a target for not the whole group, but for certain parts of the group, you have to articulate that very clearly. You have to set the period over which the target applies. You have to set the base period from which progress is measured. So I think a lot of our clients at the moment are working at their baseline measurement of greenhouse gas emissions. So is the baseline 2019, 2020? Is it 2024? Which year is it? Because that's your starting point, your baseline, and then you set a target. What do we want to do with that baseline? We want to reduce it, how fast, over which period. But the baseline is really important. I just want to articulate this as well. It's incredibly important that you are confident that your greenhouse gas emissions for that base period can withstand assurance. Because if our base period in our greenhouse gas emissions in the base period is incorrect, we will run into some issues, because you need to use the same basis of preparation for the base period and future periods. And if you improve your quality of information over that time, how do we disclose it? So really important. The other thing to consider in F is you have to disclose any milestones or interim targets. A lot of entities are choosing to do that. If the target is quantitative, whether it's an absolute target or an intensity target, and I think we've previously discussed it, and we'll touch on it again today. An absolute target, our emissions are 20,000 tons carbon dioxide equivalent per year. Target. An intensity target, maybe we're going through significant growth, and we would say intensity factor might be 20,000 expressed as a portion of revenue. So it's an intensity per revenue dollar. And maybe although we're growing and absolute emissions will go up, we want that intensity factor to go down. So there's different reasons why you might use an absolute or an intensity target, and thinking about that and articulating that. And then also you have to disclose how the latest international agreement on climate change, including jurisdictional commitments that arise from that agreement, has informed the target. So latest international agreement on climate change. Important that we look at international arrangements. Then in paragraph 34, they also say an entity shall disclose information about its approach to setting and reviewing each target. So it's not just here's the target. What was our approach to set the target? What is our approach to review that target? And how will we monitor progress against each target? So for example, you have to disclose whether the target and the methodology for setting the target has been validated by a third party. So that's where the science-based initiative, the science-based target initiative, SBTI, could become very relevant, because you could say we've set the target, we've submitted it to SBTI, they've looked at it, they've validated it, right? So that is an option. So if you've done that, you have to disclose it. It's not being mandated that you do it, but if you've done it, you have to disclose that. If it hasn't been validated by a third party, you have to disclose that as well. The entity's processes for reviewing the target, the metrics used to monitor progress towards reaching the target, and any revisions to the target, and an explanation for those revisions. I think it's really important what we're seeing in practice at the moment, and this is actually in the voluntary world or the strategic imperative world, a lot of organizations are going to supply chain customers, investees, etc., and asking, do you measure a carbon footprint? And then a little bit later, they say, can we get a copy of your carbon footprint? Then, have you set targets? Are you measuring progress against those targets? And we want you to report on these things on a regular basis. Sometimes it's even quarterly. So don't think that all of this is only about mandatory sustainability reporting. There's definitely a strategic imperative around this as well. A big focus on measuring your carbon footprint, and also associated with that, have you set targets? How are you tracking against those targets? Coming back to AASBS 2 in paragraph 35, an entity shall disclose information about its performance against each climate-related target and an analysis of trends or changes in their performance. So not just how you're tracking, but what are the trends and an analysis, right? So we're talking extensive disclosures here. Then the last two paragraphs in AASBS 2 that's looking at targets, in paragraph 36, they very specifically talk about if you are setting for each greenhouse gas emissions target. So if you are setting targets for greenhouse gas emissions, so yes, there could be other climate related, but sorry, Shannon, Melissa, can you maybe let me know if you can hear me now and if you can if you can see the slides?
I can hear you now and see the slides.
All
You're
right,
back.
Melissa, can you just confirm that I was away for a few minutes?
Yes, you were.
Okay, sorry, I did see the screen go blank and I immediately stopped. I didn't continue the discussion. Thank you, everybody. I hope everything is back to normal now. You haven't missed anything. At least I saw what happened and I stopped and I was trying to fix it. I don't know what happened. So if we look at paragraph 36 in particular is looking at if you've set targets around greenhouse gas emissions. What do you have to disclose? So you have to disclose which greenhouse gases are covered by the target. As we know, there are 7 greenhouse gases, and is your target related to all 7? Then whether scope 1, scope 2, or scope 3 greenhouse gases are covered by the target. Some people initially just set targets over scope 1 and scope 2, as some set over all 3. I would say this is my tip. If you see on a website, we're going to be net zero by a particular year, go and read the fine print. Sometimes it's net zero scope 1 and 2 only. Scope 3 is difficult, so just be careful, make sure they've actually committed to net zero for scope 1, 2, and 3. Then you have to, in paragraph C of paragraph 36, whether the target is a gross greenhouse gas emissions target or is it a net target. And if it's a net target, you also have to separately disclose its associated gross greenhouse gas emissions. Um, so you can have a net target, but you have to disclose a gross and a net target. Whether the target was derived using a sectoral decarbonisation approach, and then also the entity's planned use of carbon credits to offset greenhouse gas emissions to achieve their targets. So if you cannot actually completely reduce your greenhouse gas emissions and you want to get to a net zero position by buying these carbon credits, you have to disclose the extent to which and how achieving any net greenhouse gas emission target relies on the use of carbon credits, which third-party schemes will verify or certify the carbon credits. Very important, please don't pay money for any carbon credits that are not verified or certified. Very important. The type of carbon credit and whether the underlying offset will be nature-based or based on technological carbon removals, and whether the underlying offset is achieved through carbon reduction or removal, and any other factors necessary for users of general purpose financial statements to understand credibility, integrity of these carbon credits. Very important to do some very good research on which carbon credits you'll be using. So what you can see out of this paragraph, really, the undertone, the message, the spirit of the paragraph is really that if you are setting a target, you need plans in place on how you're going to achieve that target. And if that plan involves buying carbon credits, it's incredibly important that you disclose that, because that will have a big financial impact on your actual associated financial reports, because you'll have to spend money to buy carbon credits. So very important to do that. And then in the paragraph 37, it's just a reference to looking at cross-industry metrics. And we know from an Australian perspective, there's less emphasis of that, but more emphasis from a global perspective. So what I've tried to show you in that section is everything we're talking about around targets is running projects, running systems and processes to set targets, monitor targets, in order to create information that you can disclose publicly in an annual report, subject to assurance. So, we have to be incredibly careful around how we do this, and that we followed appropriate processes, because that process will be disclosed to the market. If we then go on to reasons for setting targets, so this is not just reasons for setting targets in saying we want to do mandatory disclosure, we have to comply with AASBS 2. This is strategically. If you've measured your greenhouse gas inventory, if you've measured your carbon footprint, that is just a baseline. That is just a starting point. The whole concept in the greenhouse gas protocol is to actually reduce that baseline over time. Remember, the greenhouse gas protocol was originally written nearly 25 years ago in order to facilitate and encourage businesses to decarbonize. So strategically, that is still the overarching principle. Yes, the mandatory reporting requires us to put it in an annual report, but the principle is still, how do we reduce our carbon emissions? So once you've got a footprint, once you've got a baseline, no good in just measuring it every year. I mean, yeah, you're measuring, you're reporting, but let's set a target. Let's work actively to reducing our baseline over time. So it's important when we set a target, and when this target becomes like a KPI for senior management, it stays on their radar screen. It also makes sure, if we've got a target, we ensure that whenever we make decisions about what products and services to provide, what materials and technology to use in manufacturing, what products and services to buy, we consider the greenhouse gas component of that. And this is where procurement has such an important role to play. If an organization has set a target, the only way they can get that target is if they reach into their supply chain with the assistance of procurement. So very important to take procurement on the journey too. It will help us to minimize and manage our greenhouse gas risks that we've identified in our climate-related risk assessment, which we discussed a few months ago. It could help us achieve cost savings. It could help us to stimulate innovation because we know we have to reduce our greenhouse gas emissions. Therefore, we spend money on research and development. And remember, the associated R&D claims that we can help you with, get some money back. That's important. Travis Maddox here at BDO in Melbourne. Look at preparing for future regulations like AASBS 2. It also demonstrates leadership, corporate responsibility, and we can participate in voluntary programs. So setting a greenhouse gas target, there are mandatory reasons to do it, to do mandatory reporting, but I think more importantly is the strategic reasons to do it. Strategically, how do we reduce our carbon footprint? If we reduce our carbon footprint, if we set targets, it will give us access to investors. It will give us access to cheaper bank loans, give us access to customers. So really important to look at that strategically as well. So if we look at steps in setting a greenhouse gas target, how would we do that? First of all, I've put the slides together looking at the greenhouse gas protocol. We know there's the corporate standard, and there's a particular guidance document for scope 2 and a value chain standard for scope 3. And there's a lot of other standards as well, but I've particularly looked at the corporate standard and the value chain standard on how do we set targets as suggested by the greenhouse gas protocol. And we came up with a 10-step approach, which I'll step through today. I have previously, and I think it might have been last year, done a presentation when I stepped through these target setting, but I wanted to recap it because often, when you hear it for the first time, it can be overwhelming. So this might be your second time. And the other reason is now that we have to do standard setting, whether it's for strategic reasons or mandatory reasons, maybe there's a greater interest in understanding these steps. So we'll step through the 10 steps. So first of all, very important that we obtain senior management commitment. We cannot set targets without senior management buy-in. It's impossible because if we want to set targets and achieve targets, we need changes in our behavior and in particular decision making throughout the organization. No other way this is going to happen. So procurement have to have different decisions based on helping us to achieve our targets, buy from different suppliers maybe with less emissions, or buy from suppliers that have also set targets and working towards targets. A lot of our clients are saying their customers are asking, do you have carbon footprint? Have you set targets? Are you working towards it? What's the progress? So it's going through the economy. Also, we need senior management commitment because we need internal accountability. We need incentive systems. We need adequate resources. Decarbonization or setting targets and achieving targets or working towards these targets, it's not something that a single person can do or a single team can do. This is a whole of business exercise, as is everything that we do around sustainability. So senior management commitment is absolutely step one. Incredibly important, the most important. Without it, you're going to really struggle. Then once senior management is on board, we can decide on a target type. So do you want to look at an absolute target, or do you want to look at an intensity-based target? So as I said earlier, an absolute target is just we've measured our carbon dioxide equivalent for a particular year, and let's say it's 20,000, and we want to reduce it by 50%, or we want to get it to 10,000, but it's a very absolute target. An intensity target is where you've expressed your greenhouse gas emissions relative to another business metric. At BDO Australia, what we've done is we've expressed our greenhouse gas emissions as a percentage of revenue and also as a percentage of full-time equivalent, because we're going through significant growth, and therefore it will be really hard to achieve an absolute target while we're growing, but an intensity target potentially a better way to go. Important to look at this from a comparative uh, perspective, what would be best for the circumstances of the business. And then some businesses have absolute and intensity targets. So as long as you've got a target, that would be good. I've put in a slide on a little bit of advantages, disadvantages of absolute targets. Advantage of an absolute target, it's absolutely designed to achieve a reduction in greenhouse gas emission. So this is our current, and we're going to go down no matter what. Whether we grow, doesn't matter what happens, we are actively working towards reducing our greenhouse gas emissions. And it's very environmentally robust, and it's transparent, and it addresses stakeholder concerns. Disadvantages, is if you've got significant structural changes. So, for example, over the last number of years at BDO Australia, we've been on a journey of integrating all our different practices into one firm, BDO Australia, which we've achieved. But that means the core entity has grown every time we add another partnership to it. So that's structural changes. So, you have to update your baseline, make sure you're comparing apples with apples. It doesn't allow for comparisons around intensity or efficiencies around greenhouse gases. It might be difficult to achieve absolute targets if we grow unexpectedly, and especially if that growth is linked to greenhouse gas emissions. If you look at intensity factors, some advantages. It reflects performance improvements independent of organic growth or decline. Target base year recalculations for structural changes are not required because it's factored into the intensity factor already. And it may increase comparability among different companies if everybody has an intensity factor and we compare intensity factors and not just absolute numbers. Some disadvantages is if you look at an intensity factor, the biggest disadvantage, there's no guarantee that our emissions to the atmosphere will actually be reduced. And companies with diverse operations might find it difficult to define a single metric to use in this intensity factor, for example. So there's some advantages, disadvantages on both. Once you've decided on your target and your type of target, it's important that your target boundary is defined. So, when we measure our carbon footprint, we always say you start with your boundary setting policy. So which entities, units is included in your baseline measurement. Now, a similar thing here. If you look at a target boundary, it's which greenhouse gases, so is it all 7? Which geographic operations, is it all of them? Which sources, is it scope 1, scope 2, scope 3, etc.? Which activities are covered by this target? Then your target and inventory boundary can be identical. I've always thought, your inventory boundary for measuring your carbon footprint would be identical to your target boundary. To me, that makes logical sense. However, you could articulate a target that address a specific subset of the sources included. So maybe you only look at scope 1 and scope 2, or maybe you only look at certain operations, maybe the operations that have the highest emissions, and you want to set a target to reduce emissions in that particular operation. The quality of your greenhouse gas inventory will inform how you set the targets. And then some of the things to consider is which greenhouse gases, which geographical operations, whether we're going to look at direct and indirect emission sources, so scope 1, scope 2, scope 3, and do we want to set separate targets for different types of businesses within our group or within our entity. So a number of things to think about. And remember, all of this we articulate, we document. Why? Because it has to be subject to assurance, and it will be disclosed under AASBS 2 if you do mandatory reporting. So we need to create an audit trail. Step 4 is choose the target base year. So we have, for a target to be credible, it has to be transparent, how the target emissions are defined relative to past emissions. So you could say we've got a fixed target base year, so potentially our base year is 2019. Or we can have a year or a rolling target base year. A fixed target base year during COVID, some entities maybe started and thought they'll use 2020 or 2021. And we know in Australia and in Victoria in particular, a lot of disruptions during 2020 and 2021. So maybe not the best years to use as a base year because we didn't have normal activity, operations, travel, etc. It's not wrong, but I'm just thinking carefully about that. So that's a fixed target base year. You often see 2019 or maybe 2022 onwards. And then a year or a rolling target based year. I'll have a look at that. How do you state a rolling target based year? A target might take the form of over the next 5 years, we will reduce emissions every year by 5% compared to the previous year. So it's a rolling target. Where a fixed target base year is we might emit 50% less in year 2030 than compared to 2019. So it's a fixed target based year. There's a fixed year we'll achieve it, and reference point is a fixed year. So your target based year is a fixed reference year in a fixed target base. We look at a time series of absolute emissions where we compare like with like. And the comparison over time is based on what is owned or controlled by the company in the target completion year. With a rolling base year, obviously the target base year is just the previous years. The previous year, if there's been significant structural changes, it will not. We will not be comparing like with like over more than 2 years at a time because it's the previous year, current year. And then the comparison over time is based on what was owned, controlled by the company in the years the information was reported. So the current year, the previous year. So up-to-date structural position. If you look at the target-based year, again, if we compare the fixed target-based year with a rolling target-based year, a fixed target base year, how far back are recalculations made? Emissions are recalculated for all years back to the fixed target base year. So if you've got significant changes, structural changes, acquisitions in 2024, and your base year was 2019, in order to compare like with like, you'll have to recalculate 2019 based on the new structure in order to compare it with 2024. Where with a rolling target based year, you'll just recalculate the prior year because that's the comparison. So I've included some comparisons so you can consider whether you want to use a fixed target based year or a rolling target base year. In step 5, we look at the target completion date. So whether it's long-term or short-term, you can see in this diagram, Short term might be in 2030, long term might be 2050. So in Australia, a lot of entities are focusing on what can we do by 2030 or 2035. Usually more certainty around that. Often people are looking at scope 1 and 2 targets by 2030. And for scope 3, they are taking a longer term view around 2050 because we need a lot of technology and innovation before we'll get to reducing scope 3, and we have to engage with a supply chain, etc. Then we also have to define the length of the target commitment period. I'm going to go a little bit faster because I've got a bit of stuff to cover. So, is the commitment period 5 years, 10 years? A maximum that I've seen is 2050. And then you have to decide whether we'll be using offsets or not. And I've previously talked about that. Very important to consider if you cannot reduce your emissions and you'll have to buy offsets, whether it's credible, what it will cost you, whether it's been certified, and this could be a costly exercise. And again, some comments on credibility of offsets and transparency, just a reminder of those. Step 8, we look at establish a target double counting policy. So, we often talk about this when we do carbon accounting masterclasses around the double counting that happens throughout carbon accounting. So given that there's currently no consensus on how such double counting issues should be addressed, companies should develop their own target double counting policy. So this would mean they should specify how reductions and trades related to other targets and programs will be reconciled with their corporate target, and accordingly which types of double counting situations are regarded as relevant. So be careful for that one. So double counting of offsets, how can this happen? It's when a greenhouse gas offset is counted towards the target by both the selling and the purchasing organizations. That wouldn't be good. Trading programs are used where you register a carbon offsets. So let's say one entity is creating carbon offsets through various activities. That entity then have to register that carbon credit. And then that entity that's registered the carbon credit can that actually say, listen, we want to use our own carbon credit to reduce our carbon footprint, or they can sell it to another entity to use it to reduce their carbon footprint. But we cannot get both entities saying, here's a carbon credit, we've created it, we're getting credit for it, plus the entity buying it from us get credit, because then we're double counting that. So in Australia, there's a whole regime to register carbon credits and track based on registration numbers who is using it. And that will be subject to assurance. And there could also be double counting due to target overlap. So again, consider that. Then in step 9, we consider the target level. So we will look at understand the key drivers that impact your greenhouse gas emissions. So we would say, what are the business metrics that has a relationship with these greenhouse gas emissions? And if you do your carbon footprint, we often say have all 20 categories across the 3 scopes, express it as a percentage of your total carbon footprint, and then look for the hot spots or the big areas and reduce that over time. So don't focus on the smaller numbers, but look at the major reduction opportunities available. Get more accurate data and think, how can we work in that space? I've always used this example, and that is BDO Australia's carbon footprint. 97% of our footprint is scope 3. So if we've just measured scope 1 and 2 and we try to reduce that, that's fantastic. But in the bigger picture, we are addressing 3% of our carbon footprint, and we should look at the 97%. And of that 97%, actually 84% of our carbon footprint is purchased goods and services, which means our supply chain. So if you ask me, BDO Australia, where do we start? Purchased goods and services, scope 3, category 1, that's where we start, reaching out to suppliers. So really important to focus your time and attention on what really matters and what will make a difference. So you can also consider growth factors. You can consider whether we already have, plans. So at BDO, we're moving to new buildings, beautiful renewable buildings, renewable energy, fancy Energy Star ratings. So those things are in place, and that could help us to say, okay, we are confident we can set a target around reducing our scope 2 emissions, for example. And then you can also benchmark against similar organizations, especially similar sectors and industries. And finally, and this is really important, you have to track and report progress. So once a target has been set, you have to track performance against it to maintain credibility, and you have to carry out regular performance checks. So actually, as you measure your carbon footprint every year, considering how you are tracking against your targets, whether you have to update, etc. So very important step, and obviously the reporting, very important, whether you are reporting strategically to key stakeholders or whether you're reporting mandatorily in your AASB S2 compliant report. Important to get the reporting right. I think over time, stakeholders will not just accept your carbon footprint and your targets. They would like to see assurance over your carbon footprint and your targets. And I think that's a whole booming potential industry for our audit partners. So it will not just be assurance over the mandatory sustainability report in compliance with AASB S2. I think there's an opportunity for auditors to provide assurance over the carbon footprint, just the carbon footprint and the targets and progress against it. And that is for entities that will never do mandatory reporting, but strategically communicate with customers and stakeholders. So watch this space. I would like to touch on science-based targets. So I've included a link to the Science-Based Targets SBTI website, some amazing documents in there. So a lot of entities, especially in Europe, have started the process to go through an SBTI accredited process, and you can do it on this website. Now, BDO Australia has recently started this process again. So we looked at, this is the process as given by SBTI. You start with commitment. So that is where you complete and submit a relevant commitment letter. Now, I was responsible for that, and our CEO agreed and our board agreed to sign off on a commitment letter that was lodged with SBTI. Now, the commitment letter does not include your target yet, but it's saying we are committing to set a target. So it's making your intent known. So we've done the commitment letter. Then you go on that you model your targets. So you would say review this target setting resources, your criteria, your recommendations, and other guidance. And that's then the next step for BDO Australia, for example. Then you get your targets validated. So you complete a target submission and you send it to SBTI for validation. And if they validate your target, and they will look at your processes, your criteria, etc. Once they validate your target, you can publicly say that it's been validated, and then you look at if the target is not approved. A company may resubmit their new targets after they make amendments. So sometimes they come back to organizations and say, you've submitted the form, we don't want to validate it, we need extra information, or you need to adjust it, etc. But you can see it's an independent third party reviewing what you submit. And then once the target is approved, companies are required to implement measures to reduce emissions. And then the company is required to report emissions and progress against set targets annually. So a lot of organizations in Europe are quite advanced on this process. As I said, BDO Australia has started at the commitment stage, and what we're now in the second box. But it's important to be able to say that a third party has looked at this. And I think it's important to address your risks around greenwashing, which brings us to the risk of greenwashing. Previously, I've shared with you that the ACCC has a focus on greenwashing. And they issued a report where they've said that they've reviewed 247 websites. And they established that 57% made concerning claims about their environmental credentials. And I've got a link to the report there at the bottom. So they said, it was vague and unqualified claims, lack of substance. There were absolute claims. There were use of comparisons. There were exaggerated benefits or omissions of relevant information. Aspirational claims without substance. Maybe no third-party certifications, a use of trust mark images, or inappropriate use of it. So you can see, if I look at this, I'm thinking this is where the auditors will play a critical role when they start to provide assurance over information before it goes onto websites, definitely before it goes into your annual report. The ACCC then also, at the end of last year, issued a guide on making environmental claims. They saw these terrible findings earlier last year, and then they came up with a very useful guide on helping entities to not make inappropriate claims and guilty of greenwashing. This is just, there's a link to the guide, but then there's a snippet of some of the principles that they flagged for entities to consider. So, for example, the principle 1, make accurate and truthful claims. Principle 2, have evidence to back up your claims. If you say you're going to be net zero by 2030, what evidence can back that up? Similar to the SBTI questions, do not hide or omit important information. So do not hide or omit the fact that your claim is to be net zero just for scope 1 and 2 and not scope 3. Principle 4, explain any conditions or qualifications on your claims. Avoid broad and unqualified claims. Use clear and easy to understand language. Visual elements should not give the wrong impression. That's a big risk. That we're saying net zero, but then in the small print for scope 1 and 2. Be direct and open about your environmental sustainability transition. So these are very good principles, and that's why I wanted to flag it. I've taken screenshots of each one of them because I thought they were, and this is the summaries of each principle. If you look at this document, it's a great read. This document includes examples of things that could be wrong and things would be what would be better, and they discuss it in great detail. But there's a summary where they say, are all your claims true and accurate? Even claims that are factually correct can sometimes still mislead consumers. So you should consider the overall impression created, including the use of visual elements. So only make claims that represent a genuine environmental impact. Do not exaggerate the benefits or level of scientific acceptance of a claim. Scientific acceptance, I want to circle. We have to make claims that can be backed up scientifically. And principle 2, incredibly important from an assurance perspective. Have evidence to back up your claims. It is good practice to ensure you have clear evidence to back up all your claims. Again, evidence that is independent and scientific is most credible. Making the research evidence or data that you are relying on easily accessible to consumers helps consumers to understand and trust your claims. And if you make representations about a future matter or something that you promise, a forecast, or you predict something that will happen in future, and this is incredibly important, you must have and be able to show that you have reasonable grounds for making that representation. Otherwise, that representation will be taken to be misleading. So incredibly important to back up your claims. Now, we keep on saying for businesses, please do not publish targets because people want you to publish targets and you think it will look good to publish targets. This is critical. Do you have reasonable grounds for making a representation around which targets you will be achieving by 2030, 2050? Absolutely critical. I've included some references on the other principles as well that you can consider. And then finally, apologies for running out of time, but I want to look at some examples and you can look at them. So this is from Coles. I've put the link in, but you can see they've got a section on climate-related metrics and targets. And you can see they've got targets in the left-hand side. They've got performance in FY24 and then in FY25 planned actions. For me, this is so simple. I like the presentation. I love tables. They want to source 100% renewable electricity by the end of FY25. So in FY24, already 45%. They want to reduce combined Scope 1 and Scope 2 emissions by more than 75%. Can you see there an FY20 baseline by the end of FY30? Third target, they want to deliver net zero Scope 1 and 2 greenhouse gas emissions by 2050. And then Scope 3 supplier engagement targets 75% of suppliers by spend covering purchased goods and services, upstream transportation distributions will have science-based emission reduction target set by the end of FY27. That is huge. It means everybody in the supply chain, 75% of their suppliers, 75% of the coal suppliers will have SBTI targets by the end of 27. It's a big statement. And they will have to work very aggressively with those suppliers. Then Woolworths, a link to their report, you can see their ambition, and you can see on the right-hand side their performance and impact. 75 home delivery EVs on the road, 42% Scope 1 and 2 reduction relative to 2015 base year, etc. Here you can see their Scope 1 and 2 visuals around their operations, visuals around their Scope 3 value chain, breakdown of the various inputs into their value chain, and then their strategic frameworks, the things they'll be doing. So they make it quite clear. So if you're a supplier, again, what do you have to do? Let's look at NAB, financial services, very important. They want to be net zero by 2050. For 12 sector decarbonization, there are 12 sector decarbonization targets now set. If you look at their environmental finance ambition, 80 billion. Environmental finance ambition for the period 1 October 23 to 30 September 2030. So those are the people they'll be financing. Operational emissions reduction targets, so their Scope 1 and 2 emissions reduction of 72%, target to reduce it by 72% by 2030, and they've got a 2022 baseline. And sourcing renewable energy target, 100% target to source group operational electricity from renewables. So again, that's Scope 2. BHP, I love this image. They've tried to articulate pursue net zero by 2050 right in the middle. And then they've looked at their value chain, shipping, suppliers, steel makers, and other customers on the one side. And on the other side, they look at their own operations, so electricity, diesel at the various mines, fugitive methane emissions, again at mines. So you can see they focus on operations, which are usually your Scope 1 and Scope 2 on the left-hand side, where you've got more control. And then on the right-hand side, they look at their value chain. So that is Scope 3. So a lot of businesses, you can see Coles, Woolworths and BHP distinguish between operations, Scope 1 and 2, where you've got more control to make these changes happen, and then value chain. where you need the support of everybody in your value chain, not just suppliers, but also customers. But just to give you some ideas, so how BDO can help, as you know, we can do carbon accounting. We can do sustainability reporting, voluntary and mandatory, and we can help you with setting targets and decarbonization strategies to achieve that, and sustainability strategy. So, from an advisory perspective, we can do all things carbon, including targets. And sustainability reporting, it's mandatory and voluntary. And then if you look at strategy, whether it's broad sustainability strategy or decarbonization or roadmaps, we can do that. And our wonderful audit partners can also provide assurance services. So please feel free to reach out to me or any of our other partners. If you're looking for assistance, we would love to meet with you. We would love to help you. So please reach out. You can subscribe to our monthly newsletters, which was just published recently. You can look at our online e-learning, and obviously attend our webinars. So I'm looking forward to our final webinar for 2024. In December, we'll be looking at climate-related disclosures. We'll focus on AASBS 2, fairly big picture to round off the year, and we'll also release our webinars for 2025. Thank you very much for joining me today. I hope you found it useful, informative. Please feel free to provide some feedback, especially because we're thinking about topics for next year. And even once the topics are released, if there's certain aspects you want us to cover, we can always work it in. Thank you very much. Have a good day.